Hello everybody, welcome back to the channel, welcome to the channel. Anyways, what a great day. Unless you're long gaming stocks, then it probably wasn't a great day. Well, it might just be game over for gaming stocks. Yes, that was a pun. I hope you liked it because I worked really hard on that one. Not really. Anyways, what happened? So if you watched my previous video, I talked about EA Sports, more or less, their video game company, and what happened. So yeah, they made a huge miss on revenue. That kind of affected their stock drastically. Then obviously Take-Two comes out the same day, reports earnings. They're actually quite good, but their guidance guided down, and investors do not like that. These stocks were down over 10%. Okay, that's quite a bit. The funny thing is, so there's about 3 big gaming companies: EA, Take-Two, and Activision Blizzard. Activision Blizzard reported earnings a couple weeks ago, I believe, and their stock was dragged down too just for being associated with them. You know, it's kind of like the people you hang around with association. Yeah, although they don't really hang around, they're just in the same sector more or less. So they got brought down heavy. All 3 stocks were down double digits today, so at least 10%, you know? Pretty bad. I'll tell you the exact numbers. Let's pull them up. So EA went down $12.31, aka 13.31% today. Take-Two was down $14.76, or about 13.76%. And then Activision Blizzard down the least out of all of them, but still down $4.84, or about 10.12%. So quite a bit. So let's talk a little bit about these sectors. So I'm not a huge fan of EA Sports. They make a ton of games. They make Battlefield, they make, you know, FIFA, they make Need for Speed, among many of The Sims, among many other titles. They have quite an extensive library. They're pretty big. They've been in the business for a long time. I remember growing up playing EA Sports games. Yeah, they make the NHL games as well. And Take-Two is another business that's been around for a very long time. They make Grand Theft Auto, Red Dead Redemption, Midnight Club. They make NBA 2K, actually. They make quite a few games as well. They're also been in the business for, you know, quite some time, right? So they're both fairly good companies. I prefer Take-Two personally, but nonetheless, good companies. The CEO of Take-Two Interactive was actually on CNBC, and I watched his interview. Pretty decent interview. He talks about working with some other bigger companies like possibly Apple and whatnot, and he also talked about streaming and how he said that streaming isn't really part of the business right now, but it could be, and could be potential there. Also, he talked about Fortnite, because everyone always wants to talk about Fortnite and the free-to-play games, and how Fortnite is possibly taking away competition from games like Grand Theft Auto, Red Dead Redemption, and EA Sports games like Battlefield and all that. I personally am not a big believer of that. I think people who play Fortnite also play these games. More or less, Fortnite is kind of a different crowd of people. I don't think their games are getting very much affected. So I wouldn't worry too much about Fortnite. He's saying he doesn't really worry too much about Fortnite either. Just like, for example, say you're worried that Avengers Endgame is coming out because people are going to go watch that instead of playing your game. Yeah, that might be true, but more or less people will go back to your game, right? If you have a good product, people will go back to that. He did mention this, and he says that he stands by his product, saying that Take-Two makes really good products, and that's what they are judged on, and people play their products because they're very, very good. And I agree with them a lot on that. As someone who's played their games, they do have an extreme attention to detail that is unprecedented. And EA Sports more or less slathers on games with any paintbrush they can find and throws that crap together, puts it in a CD, puts it in a box, ships out to the stores, and you pay full price for that sometimes. EA doesn't always do this, but sometimes they're known to half-ass things. So EA definitely deserves to be smacked down, I think. The stock is, you know, the stock and the company are both something that kind of pissed me off. Take-Two, the stock will rebound eventually. Take some time, obviously, but eventually it'll rebound, especially once GTA 6 comes out. I'm sure GTA 6 won't come out until the very, very end of the PS4 and Xbox One's lifespan, mainly because they did that with the PS3 and Xbox 360. They came out in September, and the new systems came out in November. So I have a feeling they're going to do that again because they know they're going to capitalize on people who have a PS4 and Xbox One, and then people who are going to buy, say, a PS5 and whatever Xbox is going to release, they're going to get the double dipping. You know, they're going to get people right now and people later. Just like me, I bought GTA for PS3 when it came out, and I bought it for PS4. I own 2 copies of this game on 2 different systems just because I want to play it on next gen, because it's that damn good of a game that I didn't mind spending the money for it. And that's what's more or less going to happen again. I can almost guarantee it. Mark my words on that one. Yeah. So I did make a little bet on this today. So because Take-Two and EA Sports more or less deserve to be down, Activision Blizzard does not deserve to be down, in my opinion. It's just, you know, bad association at this point. So I actually bought an option in Activision Blizzard. It expires in a few weeks, so, you know, might not make a ton of money on it, might not make any money on it. We'll have to see. I bought it at the 46 close. The stock's at about 43 now. So, and I bought it when the stock was at 42-ish. So we'll have to see what happens with that one. It might go up. If I can double my money on it, not too bad, right? You know, it seems like more or less some easy money at this point. It's not a really good investment, though, I'll be honest with you guys. I don't think options in general are a good investment. If you want to invest, you should invest long in a stock and actually buy the stock. However, if you want to sometimes capitalize on these gains and make a bullish short-term bet, that's what I'm doing. I'm only buying it because it seems like it's down for really no reason at all. And once it rebounds, then I should profit. I'm hoping it rebounds in at least the next 3 weeks. But again, like anything, we'll have to wait and see. So that's pretty much the gaming news. So after the bell at 4 p.m. is when some other stocks reported. The biggest one of them was definitely Chipotle. Chipotle, the Mexican grill. Good place. I like it. You know, not too bad. So this stock has had a whirlwind experience in the past few years. Obviously, they had outbreaks, and that didn't do too well for them. Their stock got crushed, and then the stock went way back up again and kind of crushed again, and now it's back on track and striving pretty high right now. So they reported earnings, and let me pull up the report for you guys. Chipotle, so first let's look at the stock. So the stock closed at $526.06, down 59 cents today. So really barely moved today. However, as of right now that I'm looking at this, the stock is up $52.94, or about 10.06%. That's a really big move, actually, on a company like this. What mainly happened was their EPS came in at $1.72 versus $1.37. So absolutely a monstrous beat there. Revenue was $1.23 billion, and that was versus the $1.194 that was expected. So not a big beat there, but they did beat. And the same store sales growth was 6.1% versus 4.49% expected. So absolutely monstrous beat. I'm surprised they grew that much. Also, I'll read this part here. In the fourth quarter, digital orders rose 65.9%, accounting for $158.6 million in revenue, or 12.9% of sales. To cope with a rising number of digital orders, Chipotle is updating its kitchens with a second assembly line solely for those orders. It has more upgrades like pickup shelves to display online orders in the works. Those shelves are in 1,000 of its restaurants so far. The company is also testing Chipotlanes, driving through windows for customers to pick up their online orders. It's a pretty cool idea. So far, 10 of its locations have the feature. Nicole told analysts on the conference call that Chipotlanes are helping both digital and overall sales for those stores, but that it is still in the testing phase. Going forward, the company is largely planning on adding online order pickup lanes to new restaurants instead of remodeling older ones. Interesting concept. In September, the company started a new advertising campaign called For Real to showcase its fresh ingredients and food preparation. The company also saw a bump at the end of the quarter when it ran a free delivery bowl campaign to promote its partnership with DoorDash. Nicole said that new or infrequent customers made up nearly half of the people taking advantage of the offer. The company also reiterated its intention to launch a loyalty program nationwide this year. It began testing the program in October in several U.S. cities to win back customers. The program is yet another way to drive diners to order their Chipotle burritos digitally. Nicole said that it is still in the early days of understanding the implications of its pilot, but it is building on momentum. The Mexican food chain reported fiscal fourth quarter net income of $32 million, or about $1.15 per share, declining from $43.8 million or $1.55 per share a year earlier. Excluding restaurant closure costs, corporate restructuring, and other undisclosed costs, Chipotle earned $1.72 per share, topping the $1.37 per share expected by analysts. Net sales rose by 10.4%, more or less, blah, blah, blah. That's pretty much Chipotle. So absolutely crazy numbers from Chipotle. The stock is obviously reaping the benefits of that report, up over 10%, over $50 right now. Crazy, crazy, crazy move in Chipotle. Congratulations, Chipotle. I'm not a huge fan of the stock personally. I do like the place, but it just seems a little drastic, this stock. I mean, it's not just the price, because I get it, they have less shares, but I'm just not a huge fan of the company and whatnot. I'm not a buyer of this company. If you want, maybe I'll dive in depth into this stock another time, but as of right now, that's kind of the Chipotle earnings. But good job for them. They did well. They deserve this, win, and we'll have to wait and see what happens in the future with Chipotle. It should probably continue to grow with these numbers. I'm surprised of these numbers personally. That's a huge same-store sales percent, like 6% over the 4.9. Another company that reported was Irobot. So Irobot also had a pretty good beat. Let me pull up that one. So Irobot closed the day at $89.42, up 32 cents. So marginally up like Chipotle. Chipotle is marginally down. This one was marginally up. Basically no move. And after hours, after reported earnings, huge pop. As of right now, the stock is up $10.39, or about 11.6%. So huge move. The stock's about $100 stock now. So here, let's read what happened. So Irobot shares shot up more than 13%. Oh, wow. In the extended session Wednesday, after the company beat Wall Street expectations for earnings and revenue and issued better than expected guidance. The company reported fourth quarter net income of $25.2 million, or 88 cents a share, compared with $4.6 million or 16 cents a share in the year ago period. Revenue rose to $384.7 million from $326.9 million in the year ago period. Analysts surveyed by FactSet had estimated earnings of 50 cents a share on revenue of $381 million. For the first quarter, analysts model earnings of 63 cents on sales of $256 million. Analysts expect full year 2019 earnings of $2.88 a share and sales of $1.28 billion for fiscal 2019. Irobot said it expects earnings of $3 to $3.25 a share on sales of $1.28 billion to $1.31 billion. Irobot shares has gained 2.7% in the past year. So huge beat there for Irobot. Another congratulations goes out to them. They did really well. That was a crazy EPS beat. So it looks like everything's fine and dandy with Irobot. If you don't know, they're the company that makes Roombas among other products, but that's definitely their most famous product. That little circle robot vacuum. That's like about $3.99, $4.99, somewhere around there. I don't have one. My buddy has one. He says he loves it. So yeah, apparently it's a good product. I don't know too much about their products, honestly. I know a bit more about the stock. I don't follow the stock too much, but I know quite a few people do like this stock, so I thought it's worth mentioning. So Irobot, huge beat there. They're not doing too bad. Great earnings report from Irobot. Yeah, that's pretty much all I got to say with Irobot. So moving on, we got GoPro. Oh man, GoPro. So this is a stock that many YouTubers owned, mostly because of Jeremy from the Financial Education. He was a huge bull on this topic. Is actually how I found his channel. Is I was searching up GoPro at the time, and he was a really big bull, and I watched his videos and found him entertaining. So I subbed to his videos, and I still watch him quite a bit today. So shout out Jeremy. Anyways, he had this stock. It didn't work out too well for him. It ended up turning into a go broke more or less for him. But if he owned it today, I'm sure he'd be pretty happy because GoPro is actually up a little bit right now. So as of looking at this, GoPro is up. GoPro is up only 4 cents today. Closed the day at $5.15, and they went up 16 cents after hours right here. But they were up quite a bit more than that earlier. But as of right now, they're only up 16 cents. So let's see. The camera company posted fourth quarter net income of $32 million or 22 cents a share after a loss of $56 million or 41 cents a share in the year ago period. On an adjusted basis, GoPro earned 30 cents a share compared with a 30-cent loss per share a year earlier. Analysts surveyed by FactSet had been modeling adjusted EPS of 26 cents. GoPro's revenue for the holiday period rose to $377 million from $335 million a year earlier. Revenue came in slightly ahead of the FactSet consensus, which called for 374 million. Unit sell-through of GoPro's cameras climbed 20% in the fourth quarter, according to the company's release. Chief Executive Nick Woodman said that a strong product lineup and efficient execution drove the fourth quarter results, and the company plans to further focus on expense management. In the year ahead, GoPro is striving for a full year of profitability in 2019. Woodman told MarketWatch at CES Las Vegas last month that there was no boogeyman in the holiday quarter this year, as GoPro has a history of missteps in the fourth quarter. Yeah, that's putting it lightly, to say the least. Yeah, they screwed up big time. Their Karma drone, complete disasters, literally falling out of the sky. I don't know how you screw up that badly, but if GoPro can do it, you best believe they're gonna find a way to screw up that damn badly. That was such an epic failure of a company, and Nick Woodman is an absolute, in my opinion, idiot. He should not be running that company one bit. He's one of the dumbest CEOs out there, straight up. This guy should be fired. I don't know how he hasn't been fired. I heard he was paid like $1 last year. He shouldn't have even earned that much, to be honest with you. I know he's got to support his family. I know he's got tons of money though, so I'm not like, he's not hurting. He's worth, I don't even know how much, but hundreds of millions easily, okay? So that $1 really did nothing. I hope he donated it, because he didn't even deserve that goddamn dollar. But forget about GoPro. I'm still not, I never really liked it. I did look into the company a year ago. Like I said, I was thinking of investing in it. I ended up shorting the stock actually, and that worked out for me more or less. I didn't make too much on it, but I shorted it a little bit, made some money on it, and then I more or less washed my hands of GoPro and said, you know what, I'm good. I don't want to invest long term. There's better spots to put my money, so I never invested long in GoPro, and I feel like it was a very good decision because at the time the stock was it was around a $10 stock. The stock went down even lower. I still follow the stock. I don't check it too often though. I feel like I always scroll by it, or the number doesn't really register and I kind of just move past it. I'm not a fan of this company. I don't think ever go long in this company. Definitely not while Nick Woodman is the CEO. The guy doesn't deserve to be CEO one bit, and I don't trust him to run a company. What else reported? I heard also Sonos reported earnings, and their Sonos shares had actually plummeted more than 13% after the company reported first quarter earnings and announced its chief financial officer, plans to retire. The electronics company posted earnings of 55 cents per share, beating analysts' expectations of 41 cents per share. The company also beat on revenue, reporting 496 million. Analysts had expected 491 million. Sonos said sales were slowing. Sonos sales are slowing. That's why the stock is down so much, because they beat on both their revenue and EPS. So really not too much of an issue there. The issue was that their sales are slowing. So this company just IPO'd, I believe, last year too. So yeah, you know, IPOs are always a kind of scary thing. We got some monster ones coming later this year, like Uber, Lyft, Airbnb, other ones too. This could be one of the biggest years for IPOs, but getting off topic. But Sonos sales are slowing. That's never a good thing. Not a huge fan of this company. It's a speaker making company. So yeah, I've never used any of their products though, so I can't tell you firsthand how they are. Yeah, that's pretty much it. The stock, I wouldn't stay anywhere near the stock right now. It wouldn't be definitely a long-term buy for me at all, especially with sales slowing right now. I would maybe wait. I don't think you should touch the stock over 10. Probably it would be. I would need to look further into the stock, but I don't think I would touch the stock at all. They might maybe be ready for a takeover. Maybe another company might want to take them over and use their speakers in their products, a la Apple, aka Beats by Dre type thing, just to get a little bit of exclusivity to their brand. So that's always a possibility, but I wouldn't bank on that solely. So yeah, that's pretty much the main earnings report from today. I hope you guys enjoyed the video. And yeah, like I said in my last video, if you watched it, I'm gonna show you guys real soon. I was gonna show it sooner. I might maybe post that video Friday or something. I'm gonna show you guys how I turned $100 into about $178, how I made a 78% profit on that in one day using the stock market. And no, I never bought a stock. You guys might be able to pretty easily guess what it is, but if you're a newbie investor, you might be like, what is it? I'll tell you guys, I'll show you, I'll even show you guys the bank statements, okay? So you guys know I'm not lying about this. But anyways, tune into that one. I think you'll enjoy it, and the best way to tune in is to always stay subscribed to my channel. And that is the best way. Turn on the bell notification so you can always be up to date whenever I post a video. Also, if you like this video, the best way to show your appreciation is to, well, like this video. Makes sense to me. Why don't you do it? I think you should. Do it. No pressure though. Anyways, guys, until next time, see you later and have an absolutely fantastic day.